Hey folks, well, top of the morning to you. So as you can see, the headlines right down here on my screen is another boring but resilient day. So I love this. Look at the numbers that we're seeing across the board. The 10-year Treasury is basically flat. The MBS markets, the 6 coupon and the 5.5 coupon, both flat. Love it. Love it. I can't stand this. It's way too hard to conduct business when it's just a complete yo-yo. So we love these boring days because that means no banks are failing. There's no really hiccups in the markets that's really throwing a curveball at things. That could have its consequences, though. I'm going to show you here some things in a minute, because what we're going to talk about today is we're going to focus in on rates, because the banking system right now isn't as bad as everybody was hoping it would be. Mainstream media, of course. And let's get through to some of the analytics for the day, so you guys can know how your trade should go today, and maybe what rates are looking like. So my goal here on the channel is to educate you guys everything in regards to finances. We have an emphasis on real estate, and the reason why I do this channel is the banks are failing us. If you have children in high school, they probably don't even know how to balance a checkbook. They probably don't know anything about the stock market, retirement accounts, anything about money other than how to spend it. So we have to educate them on all of this. So without further ado, let's go over to the economic calendar, because this is basically giving us the events that are taking place today and tomorrow that really might disrupt the markets. But as we're seeing, they're really not disrupting the markets, which is fantastic. We have the GDP. Now, this is, you can see right here, it's Q4. So it's Q4 of 2022. What it does is they come out with the initial reading. Usually they come out the following month. So in January, they would have came out with their expectations of what the GDP was in Q4. That number came in at 3.2. Then they revise it, and they revise it 2 times. So since the revisions, it came down to 2.7, and now it's 2.6. How they miss it so far off is beyond me. So that's that. My rant of the day, I'm going to put these right randomly in my videos so you guys can catch them. Or I hope you're not one of those ones that when you pull up to a stop sign or a red light, there's about 18 car lengths between you and the car in front of you. Please move up. Okay, you don't have to hit the guy's bumper, but just get within like maybe a half a car length. That's my rant of the day. So you're seeing through here, the GDP is, like I said, was down. The initial jobless claims. Now, this is the area that the Federal Reserve is really monitoring, because they're saying we really need to push the unemployment rates up. We need more people unemployed to calm down the economy. Well, they're not getting it right now. The initial jobless claims in the last reading were 191,000. They expect it to go up to 196. It went up to 198. That's actually good. They're expecting more, and they're getting more. My bad. I looked at this as the wrong way. So they're expecting 191. It came in at 198. More and more people are going to be filing for their unemployment claims. That's just what the Fed's goal is here. So they're really trying to shrink the demand of products. And the trickle effect goes all the way down to the people making those products, and that's me and you. Okay, so they're hoping that the initial jobless claims will go up, and they're steadily going up, as you can see right here. Core PCE, this is the inflation measure that the Federal Reserve truly monitors, puts the most weight on this thing. It's coming out tomorrow. We'll be on pins and needles until that, because this will be a market mover. Let's go over to the headlines. What do we see in the headlines? The economic faces a surprising risk as markets grapple with bank crisis. Yep, I know, and they've been beating that dead horse for 2 weeks now, and I'm going to show you some insight on the banking stocks, because they're coming back, and they're coming back strong. So, was this an entry point for a lot of people to get in? Maybe, but I'm not telling you what to do. I'm not a financial analyst. I'm not a stockbroker. I'm not licensed to do this. I'm not recommending this stuff. Please don't trade off of what I'm giving you. I do this for educational and entertainment purposes only. I'm giving you guys an idea of what I'm doing, so you guys can do your research to figure this all out. So you go through here, and there's really nothing. The average bonus, poor guys on Wall Street, or girls and people, I'll say, on Wall Street, they're getting less of a bonus, so they're not going to be spending as much money. So this is the things that we're looking at that really calm down inflation. The AI race, people are getting really nervous about AI. So there's really nothing in here that's really, a trickster in the bag. One thing is Warren Buffett just commented on Bitcoin. You can see right through here, Bitcoin is moving right now. I came in at about 28,000 and said, guys, I'm not a short-term buyer of this. And I'm missing it a little bit, but this is so volatile that I'm standing with my guns. So that's what's going on in the stock market. You can see right here, the Dow Jones, no news is good news in the markets right now. Seeing the S&P up 28 points, Dow Jones up 120. Now this could change in a heartbeat like we see every day, but right now everything's good there. NASDAQ is up 73, Russell's up, crude oil's up just a hair. Another thing is I passed the gas station today. Now in Illinois, we've peaked over $4 and oil's really not doing anything. So what's behind all that? Please tell me. The next thing is, what is the Federal Reserve going to do in the next meeting? Interesting. So let's get over to this because I want to show you something that just randomly changed. Not randomly, but this is where the money is, guys. This is the Chicago Mercantile Exchange. Okay, this is where all the hedge funds and all the bigwigs and all the companies and all them, they go to play in the futures market, and they're betting that, what's going to happen in the future. So here's what you're seeing right now. Federal funds rate, they're expecting it to go one more time. They're expecting the Fed to increase the rates one more time, up to between 5 and 5.25. Okay, that's right through here, and that's changed a little bit from our last reading just on Monday. Okay, now there's a 50% chance right over here for another 25 basis point increase between May and June. Something's going to happen. They're saying maybe they'll pause now and increase it in June. Who knows? But then from there, look at what the odds are showing you. What I want you to pay attention to is the blue areas. That's where the expectations are. That has the highest probability. You can see there through there. So they're expecting the federal funds rate, which is the rate the Federal Reserve controls. They're expecting the Federal Reserve to increase rates one more time a quarter, and then starting in July, starting to ease back on that. So the expectations here is probably the next meeting, either, like I said, come in with a quarter basis point hit, or wait till June, do it. And then from there, they're probably going to see a recession, or at least the recession is going to open its ugly head. And they're expecting it to come all the way back down to between 3 and 3.25 on the federal funds rate within the Q4 of 2024. So this just gives you a beat on what we think the Federal Reserve is going to do. Put it that way. We expect mid-year, they're going to start cutting rates in a nutshell. So let's get over to what this is doing in the markets, especially with bonds in mortgage rates. So we see right here, mortgage, this is what's happening to the MBS market. So let me refresh this screen real quick to get you a current reading on this. So we got the MBS market right now up or down 6. What does that mean? Nothing. Rates aren't going to move today. They're stable, and I'm loving it. Where are rates? Where did they end yesterday? Well, they were up 0.01 from the day before. See what I mean? There's nothing going on here. I love it. The stability is, at least even you as a home buyer, or you looking to refinance, you can at least look at this and say, okay, I can live with that. If you can budget with these rates, then you're locked in. Think of when you buy a house. If you bought a house at these rates, it's going to be probably the highest mortgage payment you're going to have. Because again, if we look back at what the odds are of rates coming down, they're pretty good over the next year. So you might have an entry point on where you can jump in and refinance and save some money. So if you're buying right now, just make sure you can afford the payment with today's rates, not estimating where they're going to be a year from now, because that's not prudent finance. So let's get over to the watch list. This is our banking stocks that we've been watching. Look at this. I found another chart for us to go through, but I created a watch list on marketwatch.com, and I go down through here because I wanted to show you guys, with this banking fiasco going on, I predicted, or I estimated or forecast, I'll say it that way, that these banks would recover. A lot of them. Now, some won't, but some will, because they got basically the bathwater went out with every financial stock out there when a couple of the banks failed. Look through here. Here's what we're seeing across the board right now. We have UBS is up 3.3 today. You have Credit Suisse up 2.3 today. These other ones, First Citizens up 1% today. But look at this one. This is what I just found. These are ETFs. Now, what is an ETF? This is educational piece for you guys out there, you youngsters. An ETF is this. It's basically a basket of stocks. An exchange-traded fund is a type of pooled investment security that operates much like a mutual fund. What a mutual fund is basically like here, the spider. This is the SPY is a ticker symbol. So you get in, you buy the SPY, and it basically gives you a basket of stocks that make up the S&P 500. Okay, so it's this one instrument here that has a whole basket of stocks. So if you buy the ETFs for regional banks, here they are. Like this one, the Spider S&P Regional Bank ETF. So it's going to have bank stocks. Let's see if we can go in here and see what stocks are held in that portfolio. Sure, it's going to tell us, but sometimes it'll tell you the highest. And here it is. Alternate ETFs, no, that doesn't really give us that, but it's a basket of stocks of that. But I wanted to show you here on the screen, here is the year to date, okay, because these things got clobbered. Again, they got thrown out with the bathwater because of a couple bad banks. So look, they're down. This much is how much they're down for the year to date. Let's go over to 1 day. Look at this one. It's up 8%, 8% in 1 day. So that's what I was saying. If it's down 66% on the year, and in the last day change, it's up 8%, something to it, guys. But this is a real risky one. So you got to look into it. Like this one is the 3 times, the banks bull 3 times shares. So what they do is they buy futures, they buy options, they buy a bunch of risky assets when it comes into this grouping. And that's why it's up 8%, but you can see where it's down double or triple than these as well. So you can get huge gains here, but you can have huge losses. So be very careful before you invest in any of these things. Make sure you do your due diligence. And then last but not least, if you guys need us, so we are mortgage advisors. A lot of times people say, I can't figure out how to find you. I don't know your phone number and anything. It's right here, folks. So if you're out there and you need consultations, you're like, hey, Dan, I'd love to get into that California program that you guys have, or I'm a first-time home buyer. How much do I qualify for? Or I need a reverse mortgage. My house is paid off, but I just can't make ends meet with the inflation and the drug prices the way they are and so forth right now. We'd love to help you. So you can reach us right here. Right here. That's our phone number. Or check us out at therateupdate.com. We have consultations we can do with you. That's what we usually do. We have today, I think I even taken over some of these because we have over 40 consultations today alone for people requesting information and can they get qualified or pre-approved for a mortgage. So if that's you, please reach out to us. We'd love to help. Thanks for watching, guys. I'm trying to make this as brief as I can, but I got to give you all the information to make sure you guys understand what's going on in the markets. So God bless, guys. If you have any questions you want to ask me personally, check us out at 3 o'clock today, Central Standard Time. I do a live event where I'll answer any questions that you guys have. Thanks so much for watching. I'll see you then. Bye-bye.